JP Morgan has recently come out with a brand new viewpoint on inflation hedge assets. They've specifically compared Bitcoin and gold. Now, of course, most people who are younger, they're buying Bitcoin. Most people who are older, they grew up their entire lives being told that gold was an inflation hedge. Over the last 18 to 20 months, we've seen inflation explode. We now have over 5% CPI, over 4% core inflation. But during that same time period, gold is down 7 or 8% on a nominal basis. It's down double digits on a real return basis. Bitcoin, however, is up over 400%. These two assets couldn't have a different story. At the same exact time that governments were printing trillions of dollars and inflation was ravaging on. Now, JP Morgan specifically has called out a couple of different things. First, here are the key drivers as to why they think more and more people are beginning to look at Bitcoin. They stated that the recent assurances by U.S. policymakers that there is no intention to follow China's steps towards banning the usage of mining of cryptocurrencies, really important. The second point was that there was a recent rise of the Lightning Network and second layer payment solutions helped by El Salvador's Bitcoin adoption, where more than 3 million people, about 50% of the country's population, now is using Bitcoin. And then the third, the reemergence of inflation concerns among investors has renewed interest in the usage of Bitcoin as an inflation hedge. Now, of course, if you were to ask a young person, would they rather own gold or Bitcoin? Of course, they would rather own Bitcoin. If you were to ask an institution, historically, the answer would have been gold. But now what we're seeing actually is that the institutions are warming up to the idea of Bitcoin as the inflation hedge. Humans are weird creatures. We simply look at what recently has happened and begin to build a narrative around it. And that's what institutions are doing. They see that gold failed as an inflation hedge, a double-digit negative real return asset. Not good in the face of trillions of dollars printed. Bitcoin, however, has the exact opposite story, and so institutions are beginning to take notice. On top of that, we've also seen some of the stalwarts, the absolute legends of Wall Street, all begin to put Bitcoin into their personal portfolios or the assets they manage. That includes everyone from Stanley Druckenmiller, Paul Tudor Jones, Steve Cohen, George Soros, and Ray Dalio. Regardless of what you think about those individuals, they provide the air cover for the career risk. The second that those folks start to put it into their portfolio, every other person on Wall Street, every other person in the financial markets can say, I put Bitcoin in my portfolio because the best investors in the world put it in theirs. You're covered. The career risk is gone. We also have this chart that shows the actual capital flows between various types of funds. These are the cumulative flows in all Bitcoin funds and then gold ETF holdings. What you can see is that there have been outflows since the beginning of the year in the gold ETFs, but there has been drastic increase in capital flows to Bitcoin funds. That's why the Bitcoin price is up, because more people want to buy than sell. And that's why the gold price is down, because more people want to sell than buy. Markets and prices are determined by supply and demand. And as we know, both of these assets are relatively scarce compared to other assets. Gold has a narrative around scarcity. Bitcoin has a verified scarcity. Those things seem to be similar, but they couldn't be more different to a young digitally native generation. And so my guess is that we will continue to see drastic increase in demand for Bitcoin, and gold will continue to be sold off by the legacy holders. We will see people upgrading their portfolio, upgrading their inflation hedge assets from gold to Bitcoin. Gold's market cap will continue to contract, and Bitcoins will continue to expand. I expect that at some point there will be a crossing, a flippening of Bitcoin and gold's market cap, but it will happen south of the $10 trillion market cap that gold has today. Gold will contract, Bitcoin will expand. Last but not least, we also have, if you look at the actual headlines of many of these articles, you can see that there is JP Morgan, institutional investors dump gold for Bitcoin, seeing it as a better inflation hedge. And JP Morgan's Dimon calls Bitcoin fool's gold. So even though the bank itself, JP Morgan Chase, has come out and said that they believe adoption of Bitcoin will continue, they believe that there will be rising demand over time, we can also see that the head of the bank himself believes that Bitcoin will be fool's gold. Bitcoin is not as valuable as his peers or colleagues believe. We will see what happens. The market will be the referee. But if history is any indicator of the future, it is likely that the demand for Bitcoin is going to increase, the demand for gold will decrease, and we will see more and more quantitative easing and interest rate manipulation, which will force people into inflation hedge assets. If I had to choose, I would not be holding on to gold. Gold is dead. Gold has failed as an inflation hedge asset, and the world is waking up to it. Let's see what happens, but this is fascinating.